Hello and welcome to your DXY update. I'm here on the monthly chart. We want to start here, then we take a look at the shorter time frame. Here on the larger time frame, we can see that the price formed the DXY formed a 5-wave move up from the 2008 lows. That is a potentially impulsive move up, even though it looks a little bit more like a diagonal pattern. So either way, it's a 5-wave move up. Trend seems to be up, but that doesn't mean we only go up in a straight line. No, in fact, I think there's a good chance that we are going to see a larger correction here. I'm tracking currently a price channel. There's a chance we stay actually in the price channel for some time, because after such a 5-wave move up, we would normally expect a corrective pullback. In this case, labeled A, B, C. Yeah, this B wave might leave us in the channel for some time. It's the corrective bounce in this wave too. So from an Elliott Wave point of view, we're always looking for the 5-wave pattern. And this 5-wave move here is basically the wave 1 of an even larger 5-wave move. So idea is, hey, this was just the A wave down of a larger correction of a wave 2. Then we have this B wave bounce that might take us into the resistance area between $105 and $112. And then from there, we can watch for a 5-wave decline. That is what I'm tracking on the larger time frame. Now, there is an alternative perspective in which the market might form one more high in this wave 1. Okay, but that's something for the future. We don't know if it's the B wave bounce or the wave 5. Either way, we should be close to a major low. A multi-year low, you could say, something that could lead to another rally in the next couple of years or so. So what we're going to do is now zoom in on the smaller time frame here into this area. Very clearly here it's all about, have we already formed the low or not? One more low is possible, but that would not change the bigger picture here, the larger time frame assumption. So let's take a look at the smaller time frame for the DXY. And what you see here on this chart is that this decline could be nearly done. I mean, this is either, this wave 4, or it might even be, should be the A wave of this wave 2 correction. Yeah, gotta relabel that. But basically the idea is, we might be close to the end of a larger correction. So again, it might just be the A wave of a larger correction, not the wave 2 itself. Or it's the wave 4, we get one more high in this larger wave 1. You see here that the market reacted to a support zone, the blue support zone, or this larger decline. The question is now, have we bottomed? Now, the extent of that move to the upside might indicate we have bottomed, but it's only a 3-wave move up. So that's not enough to confirm a low is in, because a 3-wave move up is not really a reversal pattern. It doesn't indicate that the trend is suddenly up. It's a corrective bounce, but it's large enough to indicate that a low of sorts is in place. That will now depend on if we're holding support here or not. Micro support is between $97.19 and $98.27. So this is the micro support zone that really needs to hold to keep the uptrend intact. And if we now see some upside momentum come in, it's likely the 3rd wave. Yeah, larger 3rd wave here. That's what we are tracking here next. But I need a break above this $100.30 level to confirm that. If the $97.19 level gives way, if it breaks, then the $94 to $95 area is going to be the next focus zone. There's also where a trend line comes in from that price channel, and we've got the next Fibonacci support level here at $94.70. So whether we get another low or not is, considering the bigger picture, really just noise. I think we should be quite close to a major low. Here on the smaller time frame, I think I slightly prefer another low. Because this is a 3-wave move up, and the move down looks a bit like a 5-wave decline. So we might see one more low. Yeah, but I'll change my view here. If we get a break above $100.30, then I will assume that very meaningful low is already in. That's the update on the DXY. Hope you enjoyed it. Thanks so much. Bye-bye.